Guys, it's that time of the week. It's Sunday. We have to break down the game plan for this upcoming week in the stock market. We have to break down earnings reports coming up, charts, what I'm looking at, and most importantly, what I'm looking to do in the markets this week. So sit back, relax, hit the like button, subscribe, check out my Patreon if you want all my moves in the markets. That's linked down below. And you all can get 50 free bucks from M1 Finance and 2 stocks from Webull up to $1,600, and guess what? Those are also linked down below. And with that being said, let's get right into the video. So before we even talk about the stocks that I'm looking at, what I'm looking to do this week, let's do a quick breakdown, a recap of what happened last week. And if you guys were not living under a rock, if you guys were watching the markets last week, you know that things were crazy. They were off the wall, right? We had SPY go down a good chunk, Triple Q went down, Russell, Dow, all of them went down, and the VIX went up, right? The volatility index, the fear index, this is almost at, it almost hit a year high on Friday. If I pop the VIX up, let me show you guys. We hit 35 on Friday, and about a year ago at this point, back in January of 2021, we hit 37.50. So volatility is up there, guys. Fear is up there. Uncertainty is up there, fueled by many things at this point, but mostly Omicron, the new variant, what that's going to do to the markets. We have the Fed, of course, tapering. Jerome Powell saying he's speeding up the tapering, or at least he's looking to in the December meeting. So a lot is going on right now in the markets. And overall, look, the downtrend, at least in the very short term on the 10-day chart, is still intact, right? We're under both moving averages. We took the low out on Friday. We hit 448 here on SPY. We took the lows out from the previous couple of days. Same thing with Triple Q, right? And honestly, all of these indexes for that matter, they're all in a downtrend in the past 10 days, and they're all taking lows out. That is just what we're seeing right now. And with the heightened VIX, we're honestly expecting a lot of volatility. We should be, at least, in the next couple of days until that VIX gets down, honestly, under 22 to 20. If it gets under that point, volatility should be dying down. But here at a 30 VIX, you bet you-know-what, we will be seeing some volatility. So that's a quick little rundown, little 1-2 minute rundown of what the technicals, markets have been looking like. Nothing too crazy. And with that being said, make sure to hit the like button, subscribe if you haven't done so already, guys. Make sure to also hit that notification bell. And let's get into some stocks, which again, like I mentioned, all of these are reporting earnings this week. Just when you thought earnings season was over, oh, no. It's not over yet, guys. We have a lot to talk about today. So number one is Chargepoint. And you guys remember all these stocks, not all the stocks, but a lot of these, industrials, electric vehicle stocks, charging station stocks, a lot of these went up on the infrastructure bill, right? Chargepoint being one of them. I think this hit a high of about almost 30, guys, which is nuts. It hit $28, $29, and now it's all the way back to 21, 22. It's down about 30%, 25-30% over the past couple of days. It's trading under the moving averages. We're collapsing, quite frankly, and it's looking like a falling knife. I'll be the first to tell you, but this is one that I'm looking at more as maybe a longer-term play. Maybe not necessarily a 3 to 5 year play, but maybe something like a multi-month swing, maybe a 6, 8, 12-month type of swing, maybe even more. And with earnings coming up here on the 7th and 2 days from now, that's on Tuesday, after hours, by the way, it's going to be interesting to see what these numbers are looking like. And we can see here, based on the previous 2 earnings reports, the stock has actually gone up. We went from, $23 2 earnings reports ago. We ended up running all the way to 36. And then the last earnings report, we went from about 21 to 25 in the same day or two, or the day or two after they reported. And then it went to 17. Then we ran all the way to almost 30, like I mentioned. So just because they did well doesn't mean the stock's going to go up this time around if they do well. But it's kind of interesting to see last two earnings they did well afterwards, the stock price that is. So I'm going to be watching Chargepoint. If this thing gets anywhere close to 20, and I mean $20 flat, $20.20, 50 cents, something like that. If it comes down under 20 even, I'm going to be buying some Chargepoint. And you guys in my Patreon know I actually own Chargepoint. I sold covered calls on it, got assigned, and I've been waiting for my re-entry. And I think this might be it. But another thing worth mentioning is I'm not going to be buying it before earnings, right? I'm not a big fan of gambling on earnings. I'm going to wait till after earnings, even if that means I miss a huge move up, because if I got in before earnings, right, we could easily get caught in a move down. It could easily go against you. So I'm watching Chargepoint. That's number one. Lululemon's number two. Lululemon, the trend looks very good. We hit an all-time high of 485 just recently in the middle of November, and now we're trading $50 under that high. We're at 435, which is $50 again, like I said, which equates to about a 10% drop. And by the looks of it, as of now, we are holding the uptrend, right? We're right by that 180 SMA, the juicy old 180 SMA on the 4-hour chart, with earnings coming up on the 9th. So what is that? On Thursday, they report earnings after market hours, and I believe, the last time they reported, the stock did go ballistic. I remember that. It went from 380 to 440 in a day or two, which is a big move. We're talking 15%. So I'm very interested, guys. Lululemon is, I guess it's a premium athletic wear. They have other types of clothes as well. I don't shop there, but from what I know, it's pretty good stuff. So I'm very interested to see if they do well. We're going to be watching EPS, revenue, guidance, and if we do get a bounce off 440, this could make a nice move. So keep your eyes on Lululemon, ticker symbol LULU. GameStop is another one, GME, which we were watching at about 200, right? That was before the whole market volatility that we've been seeing. It was a couple of days ago, maybe a week and a half ago. I was originally watching GameStop, hoping it was going to hold 200, 210. Fast forward a week, we're at 170. We've collapsed. And at this point in time, the fact that we're hovering above 165, 170 is a good sign, a decent sign, I would say, which was support back in September, October, a little bit in the early days of November as well. So we're holding that, which is good. But the second we take out the lows from September, October, November, 170, we break under that point, we're probably going to go to 145, 150 again, which is a bit worrisome. That might be the start of maybe a down cycle for GME. So I'm going to be watching it. Hold on. Wait, why am I saying hold on? Don't hold on, guys. I'm trying to talk to GameStop to hold on to that support, right? Hold on, GameStop. Come on. Don't break 170, because if you do, you're going to 150, right? So, keep your eyes on GME. Earnings coming out on the 8th, which is on Wednesday, I believe, right? That's on Wednesday. So, we got to see if there's a bounce back. The stock's down 35% in the past couple of days. Maybe not a couple of days, more like 2 weeks, a little bit less than 2 weeks. So, if we get some sort of good news from the earnings, we hold 170, pop 180s, 190s, this could start making a move back up, and it could do that quickly. You guys know how GameStop goes. So watch out for that. Costco is another one, COST, which has just been a ridiculously good performer over the past couple of months. You guys can see Costco was $330 back in March, and we just hit $560 per share, which is insane. The stock has gone up about 40%. So if you're a Costco shareholder this year, you're doing very well. And even if you bought it before this year, you're doing even better, right? Because it's just been going up and away. And just recently, it got a bit overbought at 560. We saw that correction, not even a correction. I mean, it dropped down about 8%, so not even correction territory. We got the sell-off, and now in the past couple of days, we've been consolidating. You guys can see here on the 5-day, 5-minute, 1-2 days of consolidation around 520 to 530, which is a good sign considering on the 4-hour chart that is right above the 180 SMA, which, mind you, has been support over the past couple of months. So at this point, Costco, with earnings coming up, let's see here on the 9th. So what is that? Maybe that's on a Friday, if I'm not mistaken. Thursday, Friday, whatever day it is. It's this upcoming week. So with earnings coming up, it's already down about 5, 6, 7% from its peak. This might, especially if earnings are great, this might end up ripping. You know, there's a chance it does see a big move. I mean, I've seen that before with Costco, maybe not the past couple of earnings reports, but I've seen it do very well after an earnings. So, yeah, keep your eyes on it. COST. Oracle is another one that's reporting this week, ticker symbol ORCL. This one's down about $10 roughly from the recent high. You guys can see we were at 98, now we're at 88. We're down about 10%, 10-11%. So we are in correction territory on Oracle. And like Costco, it got a bit overbought, right? It's part of the game, guys. When stocks get overbought, ETFs, whatever, you got to get a pullback. It's only healthy, and that is what we're seeing right now. We hit the high, we're down $10 off the high, and overall, we are still maintaining an uptrend, which is a very good sign. You guys can see we are still holding a higher low right now, and we're trading within this uptrending channel. So I think if we see buyers step in around 88, 90, we push above 90, there could be a move back towards 98, 95, $100 per share. In my opinion, I think that's possible with earnings coming up on the 9th, which let me double check. Is the 9th a Saturday? Not a Saturday, guys. Jeez. Is it a Friday? It's a Thursday. The 9th Thursday, guys. Friday is the 10th, so keep that in mind. I probably butchered a couple of dates in this video so far, so keep that in mind. So if Oracle sees a push above 90, earnings coming up, this could even rally into earnings, quite frankly. We probably will see a move. So I'm going to set my alert at $90. Mark is at or above $90 per share. The next one here that I'm looking at is none other than my dog's favorite. My dog's favorite, guys. CHWI, ticker symbol CHWI. And this is one that's just been on the down, it's just been destroyed, right? It's been on a downtrend for months. We hit a high of $97 back in the middle of August. Now we're holding 60 by a thread. I mean, this could easily collapse under 60, and it's trading down about 35% in just the past couple of months alone. And I personally think, quite honestly, that we take 60 out. I'm hoping for that because I would love to get an entry point on this stock anywhere around $45-50. I think that's a pretty decent deal on CHWI. And what I'm noticing here in terms of the trend, it's a descending triangle. We've been making lower highs since the middle of August, and we've been holding $60 since the middle of October, so about almost 2 months at this point. So if we end up taking out $60, we fail at that point, right? We're going to see a big leg down, probably to about 57, 55. That's definitely possible. So CHWI, guys, earnings are coming up on the 9th, which is Thursday. If we do get that drop under $60, where could we be going? Let's pop up this 3-year chart. We probably will be seeing levels that we weren't at since 2020, early 2020. We might be going 45. We might be going 50, 55. No doubt in my mind. So watch out for that. Ticker symbol CHWY. Stitch Fix is another one. SFIX, another chart that looks like dog, you know what, garbage, crappy chart. I don't even know what to say. It's so bad. But they report earnings on, I think, Tuesday. Yeah, there it is, on the 7th, on Tuesday. And just in the past 6 months, since the beginning of June, this stock has gone from $70 to $20. I mean, you can't make this up, guys. It is down almost 70%. And I think it's down even more than that if I pull up the yearly chart. Let me show you guys this. Holy crap, it is down way more. It was $113 about a year ago, 11 months ago in the end of January of 2021. So it went from $113 to $22 now. This stock is down over 80%. It's down over 80% in the past 11 months, which is just disgustingly horrible. I don't even know what to say. I mean, if you own Stitch Fix, I don't want to hurt your feelings, but quite honestly, I feel bad for you. I mean, this is insane. But with earnings coming up, things could turn around. You know, if there's a viable business here, if it's not a dog water business, this could easily go back up. I mean, we could ultimately break the downtrend, but it's going to take a big catalyst, a strong earnings report, great guidance. Something needs to come out to just shift this stock, because it's just been down for a year. You know, something needs to come out. So I'm going to set my alert right around $33, maybe $35, and we're going to be watching it from there. And if it breaks that point, great. We're breaking the downtrend. But if not, we're probably going to go even lower. That's just the honest truth. And the last one here is Play, ticker symbol PLAW, or Y rather. If I knew the alphabet, guys, I could tell it to you the right way. Dave & Buster's, right? They also report earnings this week. They report on, let's see here, the 7th, which is also on Tuesday, same day as Stitch Fix, right? And like Stitch Fix, this is also been getting destroyed. This stock was $51 back in March. Now it's at $29, holding on by a thread. It is down about 45%. Not as bad as Stitch Fix, but still, it is well into a bear market. It's not looking good. And if I pull up the yearly chart, we're actually down even more. From 51 now to 29, we're down about 45%. So at this point in time, you know, this stock, you know, it could go lower. I mean, honestly, you know, if you guys take a look here on the 3-year chart, we were at $4 back in, you know, the pits of the pandemic when everybody was freaking out. This thing went to $4. It was pretty much pricing in bankruptcy, and it went all the way to $40, $50. So if you bought it at the lows, sold it at 50, you're sitting dandy on a nice 10x there. But I doubt many people did that. And at this point, you know, it's definitely falling down because of the Omicron fears. That's definitely real. You know, that's been crushing the stock in the past just 2 weeks. 10 days even. You know, it's gone from 38 to 29. And if we take out this 29 low, it could be going mid-20s, low 20s. But we have to see guidance. This along with Stitch Fix, we need to see the guidance for these companies. It's very important to see where we're going to be going over the next quarter, over the next year. That's going to really, you know, shape the overall price action. That's all I really can say about this one. So, guys, that's pretty much it. ChargePoint, Lulu, GME, Costco, Oracle, CHWI. Those are my favorite 5 or 6 picks. Stitch Fix and Play, they're way more risky. But I figured let me cover them anyway because they do report earnings this week. And who knows, maybe we could get a bounce back. You never know. But overall, that's pretty much it. You know, markets, I expect them to be volatile. The futures are open right now, so let me know if we're green or red. If we're green, we might get a nice bounce back because we did take the lows out on Friday, so I wouldn't be surprised if we did see a nice green futures market, at least based on how the markets have been trending lately. You know, we've seen a big red 2 days. What am I trying to say here? We've seen a big red day or two, right? That's what I'm trying to say. Followed by a nice bounce back. Big red day, followed by a bounce back. That's how the markets have been doing. So we saw a decent red day on Friday. We might get a relief rally on Monday. Very possible. So keep your eyes on the futures market. Let me know your thoughts down below in the comments. Hit the like button, subscribe, do all that stuff, guys. And check out my Patreon if you want all my buys, sells, call outs, morning update videos, morning access, all that good stuff. It's all on Patreon. That's linked down below. Or you guys can go to StockSurfS.com/Patreon. Make sure to also get your $50 from M1 Finance, your 2 stocks from Webull, up to $1,600. Linked down below as well. And with that being said, I'll catch you guys in the next video. Thanks for watching. As always, keep crushing the markets. Stay safe out there. Peace out.